Gentlemen, let us break down today's trade. So today's trade was very interesting, and for me, I felt it was too good to be true. But I obviously didn't want to miss out on the opportunity, so I took it. So early, if you remember in the morning, I said that first of all, no shorts at all because the trend is clearly bullish. Don't go short at all. Okay, that was the first thing I said. Second thing I said that even if the price goes lower, what is going to happen is price is going to go a fake out and then continue higher, which is again exactly what happened. We got a fake out here on the support, took support here, price went higher. Now price formed a resistance right here, which I was waiting for the price to break because then we had a clear range at least till this level, at least till 3736, right? Because this is where the price. So I'll tell you how to. And now again, for a complete beginner, this might be a little bit difficult to read, but I want you to pay very close attention because I'm going to share something very important with you. So look at this zone. Okay, so this is the zone from where this down move started off, right? Now somebody might say that the down move started here. No, the down move was just consolidating here. The real down move started from this candle, and then you can see it dumped there, right? And that is the same resistance I drew here. Now this same resistance is the resistance. If it breaks, then we can expect that what the price will do is maybe the price will come till this particular level, right? So what I'm doing is I'm reading price within a particular range, right? So actually this entire thing might look like a particular resistance, right? But again, there's an opportunity inside of this. So obviously you need experience to be able to read that. But there was a resistance here, and once this broke, now again for me, this was not this zone. That was just for your example. I'd do something like this. So now this candle broke this zone and then came back down. So normally I would obviously not enter on this candle because they did not close higher. But why did I enter? Because normally if it is a fake out, first of all, let's say if it was a fake out on the bullish side, the price would immediately just drop down after a candle like this, because normally these candles are just to stop out all the buyers, all the sellers, and then take the price lower. But that did not happen. The price made a candle like this here, sustained over here, and then this candle closed here. So when this candle closed, this is where I entered. And in fact, I wanted to enter a little bit more. I was supposed to enter like double the position that I entered. I entered around 7.5 lots. I was supposed to enter around 15 lots because my stop loss was very less. My stop loss was like 15 pips. I entered here. My stop loss was like 14 pips, guys. 15 pips, sorry. It was a 15 pip stop loss. So on a 15 pip stop loss, I was supposed to enter up somewhere around 15 lots, but I did not. I entered only 7.5 lots, which was like half of my risk. So I risked only. So my entry was 22,433 exact. This was my entry. So this was my entry on this particular candle. So this is where I entered. And then once this candle closed, price started going back up again. I entered more 2.5 lots over here. So I entered here. Then what happened? Price straight up went ahead. Price went up, gave this big red rejection candle. Now 90% of the traders would shit their pants if a candle like this forms against them. But this was just a mere pullback. So you don't need to be scared from the market. The only time you need to do something is when the market is telling you that you need to do something. So if you look at the structure, did the market break structure? Absolutely not. It was just a steep pullback, right? So if the price, let's say, came straight and did not even respect this support right here, I would have exited my position. Did I exit my position? Absolutely not. I did not exit my position. I held this trade strong because this was something which was very, very normal. Now, I could have held this trade till at least till this rejection. But again, I did not want to do that because of my previous learnings. My previous learning was what? My previous learning was that don't chase big moves. Just take 1:2 risk to reward ratio and try to do that consistently over time, and you will still end up profitable. Right? So I don't want a 1:4 move. I don't want a 1:3 move. I am just looking for a 1:2 move which is going to give me my 4% returns, and I'm going to be happy with that. So because of this complication right here on the left hand side, I entered only with half of my quantity size and made around $2,200 with a risk of just $1,000. So it was a good trade, decent trade. And again, all of this starts from daily bias. If you have the right daily bias, if you've got the daily bias and you're sticking to it, you're disciplined to it, you know how to read it, and then eventually when the price gives you an opportunity, you are able to grab it with clarity and you are able to take the trade and hold it with conviction. So that was the trade, guys. I'll see you soon. Bye bye.